We know that people that can't make the live event will be able to have a link available later on YouTube on our channel. So thank you all for showing up today. Again, my name is Steve Gomez. I've been trading markets since 1995. And like I said, I'm user number 03 in the Trade Ideas database system. So I wanted to share with you today some of the things that's been happening recently, which is very exciting in the last 2 years. I've been a user all these years, but I actually joined the team in 2016 to help with some of the parabolic growth that you're going to see and understand that we're going to talk about here real soon. Before I move forward, we've got a question box on your GoToWebinar panel. Could somebody maybe type in and just let me know that you are hearing and seeing my screen? Thank you, Keith. Sounds good. Thank you, Andrew. Thank you, everybody. Peter, Bob, good news. All right, real quickly, we'll get some disclaimers out of the way. Hi, Tim. Hi, Eric. Just be aware that we are a content publisher. We are a software as a service company. We are not registered investment advisors. We're not series holding brokers. So please, anything you see in here, do not construe it as investment advice. If you're looking for personalized investment advice or financial advice for you and your family, you got to go seek out the guys who have the fiduciary responsibility guidelines and have the licenses and probably charge you a fee as well. So with that out of the way, let's get to our first slide and talk a little bit about what we want to have as the theme today. And I felt this slide, and thanks to my good friend Brian Shannon at alphatrends.net for this slide. This is a quote from Paul Tudor Jones, one of the best traders living currently among us. And what he said was, no man is better than a machine, and no machine is better than a man with a machine. Well, let's break that down. What does that mean? We like to call it man plus machine. The technology that we're going to be showing you here today with Trade Ideas is a wonderful technology, but it's still ancillary to the fundamentals and the disciplines and the discretion of traders. We're just trying to take the giant fire hose of data coming at everybody that is the market every single day and use some technology to really hone in and simplify and slow things down to more of a garden hose trickle that suits our methods and our risk tolerances. Otherwise, it's very easy to chase our tails looking for the next trade and, just constantly suffering from what we like to call overanalysis paralysis. So as we move forward here, you got a bit of a GIF. Hopefully it's in motion for you guys. But the theme of this slide is, there's a couple different ways to approach the market. If you're approaching the market as a pack hunting mentality, a bunch of dogs, well, are you, or wolves, excuse me, which wolf are you? Are you hopefully the alpha wolf or the beta wolf? Because if not, you're probably one of the people chasing your tail and getting caught up in analysis paralysis and winding up at the end of the kill with just fur and bones left over for your portion. And what we wanted to talk about is a way in which we can maybe change that theme a little bit. And our technologies we're going to demonstrate is a bit more in staying in the nature's vein of theme here, is a bit more like the leopard, a solitary creature who lays in wait and calculates the odds before expending any energy and going after its prey. And this is, a good way to demonstrate what the technology of Trade Ideas and the platform is here to do, which is to really try and simplify and save our energy, save our focus for not chasing our tail, not chasing what Twitter is talking about, not chasing what everybody in the chat room is talking about, kind of going off on our own and doing what works best for us with our own methodology. And we really feel that our technology is a great technology to help people hone in on that. And so you can take my word for it, or you can see the actual data here of the growth. This arrow not only is, as I mentioned, when I joined the company in January 2016, this is also when our technology took a quantum leap by introducing the artificial intelligence that we codename Holly. So what you're essentially looking at here is a net subscriber growth. And as you can see, that would be a chart that we would all like to own, going from lower left to upper right in a parabolic fashion. So the people have spoken. They're adopting our technology in droves, and I'm really happy to be no longer a user, but actually a bona fide employee and a part of the Trade Ideas group. Because
Steve,
yes,
when I see this chart, and I'm just popping in for a second because you have amazing flow, but one of the things that I really want to put in kind of the minds of everyone is, as you know, and I'm sure we will be showing, of course, in the demonstration, is that we do something totally different, which is we actually put the trades that the AI makes live so that there's no way you can like cheat and say, hey, well, I did this and then I did that. It's a stream of ideas that grades itself. In other words, there's a P&L attached to the trades that our customers are seeing. And because they see what's actually happening for real, that's what makes the growth happen. You can't have this growth if people are losing money all the time.
exactly. This growth wouldn't come if somebody was on Twitter saying, "Hey, I bought this at that price and then I sold it at this price." No, this is real-time demonstration and very impressive. Well, let's take a look. Yeah, here's our next slide. This is pretty much, this information is available on our website, which, by the way, in the chat window, trade-ideas.com is in there as a link. And there's also a short link in there to show you a couple of different subscription models and pricing that we have. But this is 2017. It looks very similar to what the AI that we call Holly did exactly, not exactly, but did just as well in 2016. And so this information is available on the website. But as you can see, the total aggregate trades in green here of our AI, even after considering slippage, commissions, and net, is still outperforming the bottom blue line here, which is the S&P index. So very similar to last year. 2017 is doing even better. We've got more logic and more risk management that we're improving the AI with every day. So let's just kind of get right into it. I'm going to hit escape on that.
Steve, one more second before you jump in.
Mm-hmm.
But well, I mean, it's fine that I'll just touch upon this as you're talking, which is we believe that, think about how long indexing like the S&P has been around, kind of forever since the stock market's been around. And for the longest time, this index created by this company, this private company, is this driving force of valuation. But we believe that index is so outdated, not in the sense that it's specifically bad, but as a translator of alpha or potential of what you can make, it's a horrible distribution of data, because again, simply the way that it was thought of is not the way that the market moves today and how the information gets processed. That's really one of the other things that the AI will do, is it will open you up to things that you haven't seen before, because we're watching the entire market.
Yeah, again, when I first joined, basically we did not have a lot of the features I'm going to show you, and this is a very in-depth product. And when I first started, we basically had this window right here. You want an alert? Okay, build an alert. It was like Build-A-Bear. Build it however you want. And so we've had a quantum leap in our technology and our user interface over the last 14 years moving forward. So let's kind of get into what's going on here. What you're looking at is my customized screen right here, and I've pulled a lot of tools from different areas. But we've made it extremely easy for new users to download the product and immediately have access to this thing right here, which we call a channel bar. So it's kind of in the same vein of a Netflix channel. And what is in here is a plethora of pre-existing layouts and scans. So right off the bat, let's go to pre-market. We've just left my custom layout, and now we're going to be on a channel, as we call it, that is focused on the theme of what's happening pre-market. And we've got 3 windows in here, primarily the up gappers and the down gappers. This is a very popular window for a lot of day traders and scalpers that like to really get active in the first 30 minutes of the market. Well, chance favors the prepared mind, because they've got a pretty good idea of what stocks are getting ready to gap up before the bell opens or gap down on our pre-market channel. Additionally, this is a scan that's showing you things making new highs, new lows, and doing it on unusual pre-market volume. Now, how do we know it's unusual? Well, just a quick background on the architecture of what Trade Ideas is. Essentially, we are monitoring the U.S. equities markets of almost 8,000 different symbols. And each one of those symbols has its own database within our system. And within that database, for each symbol, we can quantify things like what's the average true range, what's the average volume for a 5-minute candle, what's the average volatility, what's the average volume for a 60-minute candle. And I can go on and on. We've got tons and tons of filters, but every single one of those data points, we have a baseline in our database for each symbol. So that allows us to see anomalies or things when they're jumping off the page, whether it's a large increase in volume or volatility or candle length or a breakout of a certain range. And so it's really nice to be able to see when things are moving pre-market, knowing that these are anomalies. These just aren't, stocks that are up there because they're doing something. They're up there for a reason. So getting back to the theme here, we have a channel bar with numerous themes. Go ahead, Dan.
I was just going to say, one of the things that I love about everything that you're showing, and I think it's so easy for people to take that for granted, is that notice that you didn't have to set anything up. And that's our whole notion of Netflix and the market. As Steve said, he just went to the channel bar, and every single one of the channels that Steve will show, whichever ones he ends up clicking on, you will see a completely prepared set of windows that does not require you to sit there and dive in and do all the stuff that you're normally used to. That's the whole point of what makes Netflix cool is you can go in there and see the stuff and click and Netflix and chill. This is kind of the same idea. You want to play the stocks where there's really alpha potential, there's your alpha predator channel. You want to play against some of the other things, like for example, Steve, after this one, let's talk about the short squeeze channel.
Let's do that. And real quickly, I want to just break open. So if you ever wanted to know, okay, well, what's making this tick here? Let's look under the hood real quick. And, it's probably new for a lot of you, but I'll just take a quick moment to show you how many different filters are actively involved in the Alpha Predator channel. Alpha Predator channel is basically looking for stocks that are in motion, that are green and doing well on many time frames. So if we go to our filter set here real quick, this is how we break it down. Well, our first filter is a minimum price of 50 cents, pretty basic. What's this filter telling us? Change from the close. Well, if we click this button, you have a nice contextual understanding that the price was up at least 0.2% from yesterday's close. Well, there's one filter. The volume today, we have to print at least 100,000 shares on the tape before this alert would come through. Let's see what else we've got in here. Like I said, 5-minute volume. Well, Trade Ideas knows what a normal 5-minute volume candle would be, but we're cranking it up to say we don't want normal. We want 250% or 2.5 times normal 5-minute volume. And let me tell you where this kind of filter really comes in handy. As stocks are getting ready to maybe break out of a resistance level or a new high or above yesterday's high, this is a great metric to watch on some of our other windows, because you're seeing a bit more than what the average person is not seeing. The average person is seeing a big green bar getting ready to break out of yesterday. But if the 5-minute volume was only 17% of normal, well, then we know maybe we should back off of that because there's just not enough participation in the last 5 minutes. So I love this filter. I love to monitor this particular filter on stocks going to highs, but let's move on here real quick. Got a lot to talk about. Position and range. This basically means where is the stock in relation to today's high and low. 70 means it's in the 70th percentile and higher. We don't want to see anything unless it's at least 70% above the low of today's range. Change in 5 minutes. This means we have to have had a positive move in the last 5 minutes to the tune of at least 0.2%. Change in 5 days. Now we're looking back 5 days. We have to be positive. So there's so many different combinations, so many different filters, but that's what it looks like under the hood. And like Dan said, it's very unrealistic to come in and expect to have the power at your hands like this and know exactly what to do right away. So the first step of the channel bar is a really nice entree into getting your feet wet for what Trade Ideas has to offer. Now, I'll quickly remind you that if you do subscribe, you have the ability to sign up for a free 1-hour one-on-one session where we share the desktop just like we're doing now. We speak on the phone with you individually, and you say, hey, Steve, can you help me find an idea that's up for the day but maybe had a really nice pullback and this and that, and we work together, and we basically kind of get you and put you in the right direction so you know exactly what you're getting, and we're there to help you and increase that learning curve. So every session that I do, or Andy does, or Dan or Brad or Jamie, it's all different. So it's custom tailored. And it's a very, very good proposition. If you just sign up for 1 month, you're going to get a full hour of one-on-one coaching. And that doesn't
Hey,
include the
Steve,
webinars and the other items that we offer for technological support. Go ahead.
Steven, do me a favor. Click on one of the stocks and just let the idea surfing continue. It's a good way to show people, what else we're doing to automate all this stuff that now everyone is doing by hand.
Here we go. So what's happening now is the charts, I think every 9 seconds or so. Is that right, Dan? Is that where we are now? About 9 seconds?
About 9.5, I think.
Okay, so I'm just sitting back here and I'm letting the surfing go through the more significant ones. Okay, here we are in SNDA. I know, Dan, I don't have the most current version, but this one is highlighted. Now we're going to go down to CALX next. There we go. So we're in just an automated mode here of surfing, and then if we see something that catches our eye that we like, we can quickly stop by clicking on the symbol or hitting the pause button. But let's look around. You said what else did we want to look at? Short squeeze.
I would say the short squeeze, because that's one way that we can easily demonstrate huge amounts of power and then reiterate the fact that notice nobody had to set anything up.
Exactly.
And let's talk to them about what is short squeeze and why, all the good stuff.
Yeah. Okay. So for those not familiar with short squeeze, I've got a pretty good analogy for you. Basically, short sellers are selling first, and they have to buy to close their position. And those positions of short sellers are reported by brokers twice a month to the SEC and NASDAQ, to where we can start to get what we call short float. This window right here gives us a quick thumbnail data points on every single stock that we click on. So even if I double click on ACAD here, we know that we have 25% short float, and there's 95 million shares in that, and it looks like it's having a pretty big move today. And this would have not been brought to our attention had it not been for the fact that we prioritize everything on this channel to look for short squeezes. And so to finish the thought, the short squeeze is when basically the short sellers agree that they're no longer making money, the price is going up against them. Here's a great example right here in Myogen, and Myogen has 51% of 68 million shares in the circulation. Half of them are short. So what do you think is going to happen if they start losing money and the price goes against them? Well, here's the daily chart, and you can see what happened. This is a great chart example of what we would call a short squeeze. Now, I can tell you a lot of you names are familiar. I've seen a few of your names. You've been in my webinars. Short squeezing has kind of been what's working as of late. A lot of times the trade of the week, which we give out to everybody, which we'll talk about at the end of this webinar and how you can get on that email list, a lot of those are generated, the genesis comes from a short squeeze breakout. Because, I mean, think about it. This market has been the most hated market for the bears in any recent time that I can remember. And so it's basically the bears get short, they have to cover, rinse, repeat, and the market continues to go higher. So until that changes, the short squeeze method and the short squeeze strategies have been working pretty well.
By the way, Steve, if I can just jump in, it kind of takes advantage of something that we should all appreciate, which is the evolution of information dissemination. It used to be that the good old boys would have some good old information and they would know what they're doing. But today, that information is coming at you at the speed of trade ideas. And the good old boys, there's this mythos that the hedge funds are sophisticated, but us having been in the space for, over almost 2 decades, what you find out is hedge funds aren't as sophisticated as you think. They just have money. And that's the difference.
They're still looking for ideas, yeah.
Yeah. So what happens is it's easy to prey on them because they don't make their decisions that quickly, whereas individual investors, we have the advantage of being able to trade, even 10,000 shares here and there. That's nothing. But these people, as Steve said, when you're into, 34 million shares short, it's going to take you some time to, get out of it. Like, look at Steve, as you can see, look how many days it would take to cover this short position. So if Myogen starts going, then momentum investors start buying. The shorts are forced to cover or maintain margin calls. And what happens is a perfect storm of upward mobility.
Yep.
Now, all of these things, by the way, that Steve has mentioned, they kind of come together in what we've always said, which is why forget everything you know about the stock market. Investors approach the stock market today like, people used to approach fortune back in the day. Let me read your tea leaves with this indicator, or, the smoke signal from the Elliott wave. It's all myth. What we do is really physics related. Momentum, acceleration. The float has a size. You can do one thing with a float of 68 million that, Steve, if you would just do me a favor and type into the symbol Intel, or type Intel anywhere, and look at that float, 4.7 billion. Now think about that for your second. One animal is 98 million and one animal is 4.7 billion. Do you understand this? There's one animal is a fox and one animal is a blue whale. But most people don't.
Yeah. Here's a good example of what I had mentioned earlier, short squeeze is working. This is Weight Watchers, and it was the trade of the week, basically the one that we gave out way back here in February. And one of the reasons it stood out was a lot of the data points that we're showing you here on this pre-configured channel for you. At the time, Weight Watchers was 70% short the float. Even after all this movement, a threefold, a three-bagger move, it's still trying to work off the excess short float. So everything that pertains to short squeeze on this channel is really already encapsulated for you here. Like Dan said, what's the float? 57 million. That's rather intermediate to small. But Weight Watchers continues to make new 52-week highs and frustrate the shorts even more. So these data points have been finally thought out and put in here for you to match what is basically the theme of this channel. Let's go to a different channel. So
I was going to say something, I don't know if I even want to dare say it. It's parental discretion advised. Go back to the short squeeze.
If that's coming from you, then oh boy, here we go.
No, I'm not going to go crazy. But what I will tell you this, short squeeze and the way we present it, that, ladies and gentlemen, is as close to insider information as a retail investor can get. We basically bundled up a blackjack table. We gave you a card counter, and you now know the count. The short float percentage is kind of like the count in blackjack. And the higher the stock has been, the more odds it will continue to go. That's the beauty of it, Steve. I mean, I still get excited.
Well, I'm very excited about what I'm about ready to talk about here. Last year, 2016, was the breakthrough year that I got excited, was the AI. It really changed my perspective and my understanding of the market. And we'll get to that tool in a moment. What I think is the most exciting development in trade ideas with 2017 is this graded colorization here. For the first time, that's Myogen. So if I go in and type spiders, that's a bad example because we got some bad ticks in there. The Qs, let me find a better example here.
It's because you're seeing a lot of post-market data.
Yeah, it's the post-market. But if I go back to Myogen, what I want to really focus on here, again, is this gradient. We now have the ability to have input and output. And what do I mean by that? You type in the stock Myogen because you're interested in it. It hasn't come through any of our alerts, or it's just something that you decided to take a look at. But what we have for you is this risk-reward gradient here. And it is shaded with a smart stop on the bottom of that orange area, and the upper area we can see on the daily chart where the actual upside is. So we are now giving you drop dead levels of risk reward, risk to the downside and and price targets to the upside. And this is not just numbers pulled out of thin air. If you've looked at charts for a while, you take a look at this thing, Myogen, and you go, yeah, I'd probably agree. Look at where we broke out from. Here, 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 here. We broke out of it. So prior resistance can easily become current support, but it shouldn't be anything less than that. So you can notice that the logic that has been drawn in here is really pertinent to what's going on. The artificial intelligence and the logic behind the scenes is now giving anybody on any chart the ability to have a very well researched probability level of support. And it's going
And
to be different for every stock.
Steve, do me a favor. Throw in LJPC, which is La Jolla Pharmaceuticals. It was on one of our short squeezes or something or other. But that's another great example of where if you look at the daily here, it also knows when to tighten up and when to expand.
Mm-hmm.
So depending on the behavior of the stock here, and it's assuming that the current price, wherever that is your entry. And it's like, okay, based on how it's been behaving, this is how I would do it.
Even looking at the daily chart here, we can see there's a little area there, touch, touch, touch. There's 3 days in a row of support. Here's resistance. So there's your pivot point. There's a resistance on that candle and 3 days of support on this candle. My point is, as a trader with 10,000 hours, when I look at these gradients, I am sold that these are not just numbers that are coming out of nowhere and being spit out for the sake of spitting them out. These are tried and true, tested levels. And
they mathematically reiterate your hunch because you know that the computer now is kind of doing what a successful investor would be doing by hand, kind of guessing, visually on every stock. But here we're doing it mathematically. And that's the whole point of really, to me, active investing being more efficient is offloading all of these things to the computer, where now, as Steve, if you click on surfing again, what we're trying to get to, and what I think we're succeeding, is this Google navigation type of environment or combined with Tinder, no less, where you're like, yes, no, yes, no. And and as Steve said, you look on the daily, everything's dialed in for you. You can see what's going on, and it's yes, no, yes, no. That's it. Not like, did the Fibonacci cross the Elliott wave, and then did they make a MACD baby?
No. And additionally, charts are really the one thing that we have as traders to interact using our eyeballs and our brains. And the gradients here of the suggested risk-reward levels, in my opinion, are going to very much help new traders climb the curve a lot quicker than you would without them. I think it's a great teaching mechanism and also a great trading mechanism. So this is a wonderful, wonderful new feature that I'm really excited about, and I just keep touting it to new traders to really help them increase the level of their learning curve when it comes to looking at charts and identifying why in the past it was at a support or resistance level. Moving on to social media, we've got a social media channel. Like I said, we monitor all the stocks out of the U.S. markets, but we also monitor stock twits for social media mentions. In other words, how much more is HDSN being discussed today over normal? Well, about 1,400 times normal. So that in itself is another wonderful channel. The Surge channel, people ask us all the time, well, do you guys have a news feed? Well, our news feed is pretty much the Surge channel, because if something's going to be happening during the day, you can bet that it's going to come through the Surge channel if it's good or bad news to the upside. This channel is basically monitoring stocks for explosive volume in a 1-minute time frame and a 5-minute time frame. If there's somebody that wants to maybe monitor what's going on in the options market, we've got some tools for options that do the same thing. They're measuring explosive moves in puts and calls and put-call ratios. So once you unpack trade ideas and you have this channel bar, it's as simple as saying new channel bar, and you'll have the ability to just go right into exactly what you see. Now here's a neat little trick. Let me just show you something. Let's go back to the pre-market. A lot of people like to look at that gap up scan, but what I can't do is make my own configurations, make my changes, shuffle around the columns, and make the colors the way I want, because this is a public channel. But here's what you can do. Anything you see on there, you can steal it, beg, borrow, and steal by right-clicking in what's called Save to the Cloud. So I'm going to save that to my cloud account. So if I want to go back to where we first started, which was my default layout, I'm going to load that layout, the default layout, and essentially this is where I can collect all the things that I want to be useful and custom to myself. So I go right back to File and Load from Cloud, and this is a way in which you can basically take what's already been established and created on the network, on the channel bar, and there it is, up gappers. I'm going to load up gappers, and there it is. It's blank right now because we are not pre-market. There we go. This one is primarily active in pre-market, and then once the market opens up, these gap numbers will freeze. But at least I know that these three guys were having a hell of a gap up today, and now I
Hey,
can go
Steve,
and
click on the post-market channel when you get a chance, and sorry for the interruption, because that could be more cogent since the post-market's on right now, and people could actually see it as the other end of the spectrum.
Sure. So there we go. To finish my thought, there we go. That is now a window that I can use and save into my default layout. Let's see, where is the post-market channel?
At the end, at the bottom. Right above Barry.
After hours. Very similar to pre-market, but now we're seeing what's moving in after hours. And once again, the single stock window has been pre-configured for you to show you the relevant data points. And the purple area here is basically showing us what's been happening in after hours on this 5-minute chart. And so we're basically surfing through looking for ideas in post-market to maybe write down or to consider putting on our radar for tomorrow. So we've only scratched 10% of the different channels and the different themes here. So let's go into what we call the Holly AI channel. All right, so this is the flagship channel of the AI technology, which we have called Holly. And what you're going to notice here is a couple of things. We have a parent window. This parent window essentially gives us all of the players. Look at this as like a bunch of college players sitting on the bench waiting to get into the game. So last night, the AI back tested about 35 different strategies, and 1, 2, 3, 4, 5, 6, 7 longs were really the only strategies that came out and met our conditions of scoring, looking at win percentage and profit factor. The rest of the strategies that didn't make the cut, they go back into the hopper, and they'll be trying their luck again tonight to see if they can impress the AI enough to have the AI make the strategy viable for tomorrow. So what happened today? Well, one of the things we look at in the AI is it's not exactly, a red light, green light type of display. It's more of a canary in the coal mine. What can we deduce from having a non-emotional trader right next to us watching all day to see what that non-emotional trader is doing? It's kind of like golfing with Tiger Woods. What club selection is he using? How is he accounting for the wind? So there's an interesting observation here today. One, only 3 trades came out, and I can tell you all from experience that that is a very, very low count for the AI. Typically, we might have between 10 and 25 trades every day. So if you recall, coming into the market today, we had some overnight scares in the futures, and the market gapped down. And for the first, let's take a look here at the first entry time. It took literally, this is Pacific time, 7:20. It took 50 minutes, 50 minutes before the first trade even came through. And that's pretty unusual for Holly the AI. Typically 15 minutes after the open, we're starting to see some trades. And we're paying attention to what? The directional bias. Are they all shorts? Are they all longs? Are they maybe related to a certain industry group? But today, the AI was kind of the canary in the coal mine telling us, there wasn't a whole lot of opportunity, and the trade selection of only 3 trades by the end of the day pretty much solidified that. This is a very low trade count for the day. So what's nice is, sometimes the best position is, to slow down, sit on your hands. And if you see an unemotional robot not taking a whole lot of risk on a lot of different trades, well then, we should be kind of thinking the same thing, because the AI is not going to suggest a trade, not going to trigger a trade unless it is statistically probable. And tomorrow morning, this is going to look completely different. We may have some short strategies in there. We may not. But let's take a look and break down one of the good trades that worked today here. ABVD was the best trade of the day. And if I zoom in here a little bit, oh, that's the daily. Let's not concern ourselves with the daily. Let's concern ourselves with what happened here on the trade. So here's a 5-minute chart. And just like the other gradient that I showed you earlier, if you type in any symbol, we have the same risk-reward type of gradients here in the red and green colors. What the blue line signifies is this was the area of purchase. The red line signifies where the stop would be. And so you can see what happened is the stock moved in the right direction, pulled back a little bit, and then moved really nice for the rest of the day for the most part. So of the 3 trades that came out today, that was probably the best of the 3. And that one was obviously a long strategy. We did not have any short strategies. But it gives you a guide as to how active is the AI? What direction is the AI going? Every evening, these strategies have to reprove themselves by going back through and going through back testing. And so once a strategy starts to decay, and trust me, strategies, they will decay. Change is the only constant in the markets. What once worked at some point in the future will stop working. And, if we get emotional about our strategies and our methods, we might be a little bit stubborn in ditching the method because the returns are not quite there. But what the AI can do is tell us very quickly when a strategy is starting to turn and the win percentage is starting to decay and it's no longer viable. You won't see it here on the main strategy parent window. I know you have a lot to say about AI, Dan. What am I missing?
Well, Steve, I don't really think you're missing anything. You kind of explained it pretty well. It's we talk about the duality of what people want versus what they should have, and how we had a great webinar about the fact that people want the goose that laid the golden egg. They want this thing that just give them winners, winners, winners. But we were talking about how the AI not only does that, but as you mentioned very eloquently, it's the canary in the coal mine. It's not profitable all the time. I mean, we do also have losing days, but on those days, the fact that when it struggles, it communicates to you that, hey, if the AI is struggling, you too will probably be struggling. If the AI is trading small, it being kind of like your caddy, you too ought to decelerate. When the AI does more, you do more. Again, it is your guide.
Yeah, a lot of times 10 o'clock Eastern, the market comes out with data points, and it hasn't happened a lot, but I've seen it a few times where the market sells off on the data points that come out at 10 o'clock Eastern. Well, it's no fluke that a lot of times when that happens, right about the same time, maybe even a minute before, you might see the AI firing off 2 or 3 or 4 short positions in quick succession. And I tell people, pay attention to that, because a lot of times you're going to see the market indexes slowly follow suit. What's happening under the scenes, the AI is picking up on individual stocks, and the actual market may follow suit. Well, we've been in a pretty good bull market.
Steve, how many times have we seen where, when the pharmaceuticals are going, the AI is in the pharmaceuticals. When the energy is going, the AI is in energy. Again, because it's speaking not notions and sectors and all these things in which way we describe it, but looking at the market purely from an odds perspective, like the best card counters at MIT who beat the casinos in Vegas. We take that same approach.
Yep. Card counting is probably one of the best analogies that we have for this, because that's basically playing probabilities. Those guys are doubling down and participating when the odds are in their favor. And that's what the AI is showing us.
There's no guarantee. Even when you card count, you're not guaranteed to win. It's just that you're going to do better. And the only thing I would finish is that just like we did in the beginning of the presentation when we showed you the animal cards, when you see the strategy and the names like pushing through resistance, Count de Monet, looking for a bounce, Mighty Mouse, quarterback, I mean, the idea is that we want you to kind of visualize some things. Like, for example, wake up call is something where there's not a lot of volume yet, but it's starting to move before everyone's in it. That's why it's called wake up call. And so then the next visualization leap is that each one of these names, that's its own leopard. And it's sitting under that tree. Like wake up call is the leopard that sits there and waits for these stocks to do its little thing. And Steve's showing you, we have the descriptions of all of the stocks right on the web, and tons of videos, again, that really help you get through the product. But the AI is the next evolution of investing, and this AI is not throwing you into some index. So just so you know, the robo-investing, and there's a lot of confusion about this, Steve, the current world of robo-investing where people are like, oh, robo-investing. It's not robo-investing, it's robo-conveyor belting. They automatically take your money and automatically throw it into an index. Ta-da! There's no brains behind
1%
that.
fee, go play golf.
Right. That's right.
You know,
This is a computer that believes itself to be a discretionary trader and behaves in that kind of a way to build a discretionary account. We're looking for real alpha. This is the future, and you're not going to find anything else like this from any other vendor.
nope. All right, so a quick demonstration of something that we haven't talked about yet is the back testing. We've mentioned and we've alluded to how the AI back test, but we can manually use that same platform to try and define what some of our custom scans outside of the AI are doing. And one of the things I commonly hear is, well, this looks like a platform that's just good for day traders. Well, what about swing traders? Well, matter of fact, I've got something I want to show you here. This is a scan that I've created from scratch looking for the hammer candle, the elusive hammer candle that a lot of people like to look at. Basically, a lot of selling in the open and then buying the stock all the way back. Well, this is a scan that is looking for just such an event, and I only get about one or two alerts that come through every day. But let me quickly show you one of the tools that we have. It's called the odds maker, which allows us to back test. So what I'm about to do is use my West Coast time here and say, what if I started at 7 a.m. and all the way up until almost the close? What if I bought every time one of these alerts came out of this window called the washout bounce, which is the hammer candle? And what if I held it for down here, tomorrow plus 3 days? So basically a 4-day trade. Okay, risk management. What if I deployed a 2% stop loss, but maybe a 10% upside target? We can go back and we can sample 64 trading days, which is almost 3 months on the calendar. So what happens if I click simulate buy? Right now, the trade platform is going back 64 trading days and looking through every single one of those alerts that came out of that washout bounce scan, looking for a non-stop out of 2%, looking for profit targets of 10%, or the trade just goes ahead and expires in today plus 3 days. And what we get in return is going to be a nice data set here. Real quick, Keith L., will this work on other markets, perhaps Forex, gold, or oil? Not at the moment, possibly futures down the road, but we are solely focused on U.S. equities. That's where the majority of the world seems to want to come in and play. Now that we have our results here, what this is showing us is what would happen to, to our equity curve if we deployed such a strategy. Let's take a look here. 109 trades over the course of 64 days, so it's averaging about 1.5 trades a day. 64.2% win percentage. The average winner was $2.07. The average loser was $1.57. And the profit factor was 2.5, which basically means the winners are outstripping the losers by 2.5 times to 1. These values right here, I can honestly tell you, this would make the cut with the AI. But it's not one of our AI strategies. We don't have enough data going back on this one. It's just my personal one that I use for swing trading because I love the washout bounce concept. The washout candles can many times signal a nice move ahead. For instance, look at Triple D here. Twice this thing came through. Here was the first time, basically washed out all these people's stops, mitigated future volatility for the next 3 days, and a really nice movement there. Same thing happened here. It came through this alert on this day. 3 or 4 days down the road, it moved higher. So that's really just one of my basic custom scans, and I wanted to show you all how the back tester works. And everybody can have access to the back tester as well if you subscribe to the premium. And the premium now, as we're talking subscriptions, the premium includes our AI module, which all I've basically done is taken the tool from Holly channel and brought it into my universe where I have everything I want to see. So I've got my AI, I've got my charts, I've got my sector analysis up here. This is basically a list that shows us that what was strong today was silver and natural gas and gold miners, some defensive plays for sure, but all of my other custom scans are down here ready to go at a moment's notice. All right, where should we go from here? Any questions?
I think, yeah, we can do more questions.
Could we please have a link to the custom swing trade scan? Well, I would be happy to give that to you, Randy, and that means I'm assuming that you're a Trade Ideas subscriber. So let me show you how easy that is to do. We take the right-click, save, but this time I'm not just saving to my cloud. I want to share this cloud setting, and so this is how we can collaborate with other Trade Ideas users. Save and share, and I'm copying this to my clipboard now. What I'm going to do, I'm going to drop this into the chat window, which is available to everybody on the GoToWebinar toolbar, the floating toolbar, and click send. So now it's in there, and I don't know if you can see it, but when I click on the link, what happens is it takes you to a page, a landing page like so, and all you have to do to absorb and take on this strategy is copy the URL onto your clipboard, and you're done. Because once you go over here to File, Load from Cloud, it's going to be right there waiting for me in that window. Load it, and there you go. There's my copy. So for anybody that currently is a user, I dropped that code in there, and that would be the instructions that you would do to load it into your account. Yes, Dan.
And Steve, that pays such huge dividends at the support level where sometimes where somebody else would have to come in and do a bunch of stuff, we literally send you a cut and paste and boom, the problem is solved.
All right. Thank you, Randy, for the comment. He is a user and he is loving every day of it. He got it. Very good. Thank you for that feedback.
I think it's pretty much time to wrap it up. We've done a good overview of everything. Maybe the next thing to do is just to kind of wrap it up by showcasing the trade of the week and the free trading room and hoping people join up to take a look at no expense to them.
Yeah, just a reminder, we've got the free trade of the week. The loss leader of the year was Weight Watchers. We demonstrated that earlier, and as I said, that was called back in February. PayPal has been another nice recent move as well. So if you're wanting to get on the trade of the week, and trust me, it's not just an email that comes out with 4 letters. We take time over the weekend to write content, put charts, put levels, the reasoning behind the trade, suggested stops, suggested targets. So you got nothing to lose. Free is a great price, and that's what we'd like to offer you guys for attending today. Additionally, we also have the live trading room, and if I can just bring up Trade Ideas again here real quick, because what we offer is a free trading room with Barry Anderson, who's trading his own account using Trade Ideas technology and demonstrating the technology. And what I'm going to do is just bring over this so you can see this. Trade-ideas.com. If you click on live room, anybody is welcome to come on and create a free account. And there, trust me, there are hundreds, probably 400 to 600 people in here every day watching, listening, learning, asking questions. And it's one of the better chat rooms out there, and it doesn't cost you anything. So we want to offer you guys that as well. Just go to the live room on the menu at trade-ideas.com. And also, as we said, the trade of the week, trade-ideas.com/free will get you onto the mailing list. And, this is just scratching the surface. We have 4 webinars a week. We have a Friday session where we go from, 11 a.m. to 2 p.m. Eastern, where we open up the forum, just like we're doing right now. And all the Trade Ideas users come in and they go, hey, I've been trying to figure out, how do I do this? How do I do that? And as Dan was alluding to earlier, we can say, well, you know what? Send me your cloud link. Let me take a look at your cloud link. And that's an easy, instant way for me to break open your settings and say, this is why you didn't catch that stock. You need to adjust this filter or add this filter or turn this filter off. So, the support, the concierge, the availability for new users is, I think, unprecedented. And again, that's why you're looking at subscriber growth just like that. And that's why Andrew is commenting, or Randy is commenting, that he's loving every day of it. All right, back to the last slide before we say goodbye. If you want further information, the main info at trade-ideas.com is going to be your best bet. Any comment, question can be routed to the correct person on our team. I'm Steve at Trade-Ideas. Dan is Dan at Trade-Ideas. Dan is at Trade Ideas 1 on Twitter. Myself, I am at Today Trader on Twitter, and we're also on Facebook. So if you missed any portion of this event, just remember, check your email in a few hours. A link will be sent out to the YouTube replay of this. And we really thank you all for showing up and asking questions. Anything else?
Thank you very much.
All right.
And have a great day.
Thank you so much. Bye-bye.